This graph is intended to set some context for the size of the dairy industry in each of the 8 countries. The US industry is roughly 4 times the size of the New Zealand industry, so the US production on this graph is just their export volumes. It can be a little sobering seeing how much additional milk a country like the US can add to international trade. This graph highlights the trend in milk production growth for each of the 8 countries, where 2003 milk supply for all is set at 1. All countries have been growing milk production except Australia, although some countries like Argentina and Uruguay have seen growth stall at times. I believe it's fair to say that all of these countries are experiencing similar challenges in regard to general environmental, societal, processing, marketing, and consumer trends. Farmers in all these countries complain about the unfair practices of supermarkets and big business, how their dairy processes are not efficient enough, and how weather events and potential changes to climate are impacting them. The UK's growth in milk production is comparatively poor, with an annual year-on-year growth over the last 18 years of just 0.6%, with all of the growth effectively coming since 2014. This is the same graph of milk production growth over the last 18 years, though trend lines have now replaced joining of the annual dots. This highlights how strong the growth has been in most countries, with the exception of the UK and my own country, Australia. For any country where farmers have the potential to increase milk production, then periods of low or no growth for an industry confirm that most farmers are lacking profitability and are unable to produce the cash or the confidence to deliver growth. The graph also highlights how growth in milk production has accelerated in Ireland once subsidies were removed. Ireland has really focused on maintaining a high percent of pasture in the cow's diet, so that cost of production was low and profit margin high compared to the European counterparts. Unlike in the UK, once quotas were removed, the Irish industry was in a position to profitably expand, as the upward curving light green line highlights. So what has been happening with profitability in the 6 countries for which I have full business performance data? These countries have a range of climates, while New Zealand, Australia, Argentina, and Uruguay are all major exporting countries, and South Africa and the US are more domestically focused. This graph has return on capital on the vertical axis, which is the ratio that defines profit. Clearly, South Africa in dark green is the outstanding performer. However, the first important point I want you to note is that in the highlighted period of 2003 to 2007, Australia in yellow, Argentina in light blue, and Uruguay in dark blue all had higher levels of profitability than New Zealand in black. However, by the end of the period, all 3 countries have consistently lower levels of profitability than New Zealand. This is the same graph as the previous one, though with trend lines added. 3 countries have been increasing profitability: South Africa, New Zealand, and the US in red. 3 have been experiencing declines in profitability: Australia, Argentina, and Uruguay. South Africa appears to be an anomaly, though the huge increase in profitability through to 2012 is linked to rapidly increasing pasture harvest, as you will see. So what is behind New Zealand's gradual improvements in profitability, and what is behind Australia's, Argentina's, and Uruguay's loss in profitability? Milk price is often the primary focus of farmers' concerns. This graph has milk price in US cents per litre of energy-corrected milk on the vertical axis. There are a number of interesting factors to highlight here. New Zealand milk price in black is the most volatile, given that country's almost total reliance on the export market. South Africa in dark green does have an advantage over the 4 export-focused countries through to 2011, which is what you would have historically been expecting given its domestic production focus, though this advantage has disappeared since 2011, and yet profitability has remained high. The US, UK, and Irish milk price is almost always significantly higher than for all the other countries, with the UK having an anomalously high price from 2017 to 2019, linked to the depreciation of the pound. The international market trends are clearer in this graph when trend lines are added. Although you might hope the linear trend for the UK's milk price might be real, it is based on a short-term anomaly and would be unsustainable. So this curvilinear trend might be closer to the reality. What is interesting is that where governments do not restrict market access, then milk price is now similar regardless of whether the country is export or domestic focused. For those countries where governments do interfere significantly in the trade of dairy products across their borders, such as the US and the EU, the premiums being paid to dairy farmers over and above the internationally traded value of milk has significantly decreased, and the difference in price is continuing to narrow. This change in the dynamics of internationally traded milk prices coincides with two major changes in international trade. Firstly, the emergence of China as a huge importer of dairy products, and secondly, the emergence of the US as a major exporter of dairy products. This is an important change for the UK dairy industry and will only be heightened with Brexit, in that the historical milk price premium UK farmers have received over and above the internationally traded milk price is likely to continue to reduce. So farmers will need to focus on what they can do on farm to produce milk at a lower cost of production if they're going to survive and thrive. And for Australia, Argentina, and Uruguay, their milk prices have become increasingly competitive with all other countries. So this cannot explain any of their loss in comparative profitability. So how has pasture harvest influenced the changing fortunes of the countries in the study? Well, although you can see how impressive the South Africans have been in increasing pasture harvest through to around 2012, New Zealand's pasture harvest looks relatively unchanged over the 17-year period. And remember, it is in this highlighted period when Australia, Argentina, and Uruguay had higher levels of profitability than New Zealand, even though the levels of pasture harvest were much lower. Once trend lines are added, the changes in pasture harvest over this period are clearer. New Zealand in black has not improved its position compared to any of the other countries over this period, and yet it has gradually improved its level of profitability. I've added Tasmania, the southernmost Australian state, to this graph in light green, and Tasmania, along with the rest of Australia, have made more progress in improving pasture harvest than New Zealand, and yet lost profitability and competitiveness compared to New Zealand, as have Argentina and Uruguay. So if the level of pasture harvest doesn't explain any of the loss in profitability, what does? This graph plots changes in pasture as a percent of the total diet. This is defined as the percent of energy provided from pasture that is harvested on the effective dairy area as a percentage of the total annual energy requirements of the cows. New Zealand stands out with its very high percent of pasture in the diet. Once trend lines are included, it is evident that New Zealand has changed its production system little over the 17-year period, with pasture continuing to comprise over 75% of the diet. I've also added Tasmania in light green to this graph. When the table of the 17-year change in percent pasture in the diet is added, it is further evident how little New Zealand has changed. All four of the other countries have large decreases in pasture as a percent of the diet, with Australia and Argentina having the largest decreases. And it is Argentina and Australia where the steepest increases in cost of production and loss of profitability have occurred. These changes have coincided with significant increases in the amount of concentrate fed per cow and the continuing breeding of large US-type cows. Tasmania is the Australian state with easily the smallest decrease in pasture as a percent of the diet, and it is the one state with the highest level of profitability and the only one that has had consistent growth in milk production. So now let's look at the trends for cost of production, arguably the most important single measure outside return on capital for dairy businesses to monitor. Why? Because maintaining a low cost of production that is competitive with other export-focused countries is essential, especially as the world has become more interconnected. Equally, for domestic-focused dairy industries that are exposed to imported dairy products, it is essential that they can compete with these products on price. The table outlines how cost of production is calculated, with livestock revenue and any other non-milk revenue being deducted from total operating expenses. You can see in this graph that Australia, Argentina, and Uruguay all had similar or lower cost of production than New Zealand in the early period, with all three countries moving to having a much higher cost of production than New Zealand in the later period. The United States, in red, has a substantially higher cost of production throughout the entire period, which might make some of you wonder why so many farmers in pasture-based countries have been adopting US-type production systems. Once trend lines are added, it is clear how each country has been progressing. To further highlight these comparisons, I've added the table with year-on-year increases in cost of production for the 6 countries. New Zealand, South Africa, and the US are the top performers, with all 3 of the other countries having much higher increases in cost of production. This graph has operating profit margin on the vertical axis. Although there was a lot of volatility in this ratio, New Zealand has progressively moved to being in the strongest position, with South Africa arguably in the next strongest position in recent years. All 4 of the other countries, including the US, have lower operating profit margins, with Australia dropping to the bottom of the pack as time progresses, and both Argentina and Uruguay progressively losing ground against most of the other countries. This is the same operating profit margin graph with trend lines. This again highlights how New Zealand, South Africa, and the US have been maintaining or increasing profit margin, while the other 3 countries have been declining. It's important to note the low profit margin for the US, with this being a characteristic of all feedlot production systems. These systems are based on high volumes of milk being produced per cow, often 9,000 to 11,000 litres per cow, with this milk being produced at a comparatively low profit margin. This can still result in high levels of profitability when commodity prices run in the dairy farmer's favour, and can equally result in periods of large losses when commodity prices are unfavourable. However, feedlot or TMR systems could never be described as having financial resilience, given how just a small change in milk price or in other commodity prices can result in financial losses.